All right, ready to dive in. Today, we're tackling a topic that can be a bit of a head scratcher: mutual fund investments as an NRI.
It's a world with its own set of rules and regulations, but don't worry, we're here to break it all down.
So let's start with the basics. What exactly does it mean to be an NRI? I mean, is it just about spending a certain amount of time outside India?
Well, it's a bit more nuanced than that. It's not just about how long you're abroad, but also about your residency status during a specific financial year.
Ah, so there's more to it than just booking that extended vacation. And to make things even more interesting, I've heard there are different categories of NRIs.
You're absolutely right. You've got your PIOs, your OCIs, your expatriates. Each category comes with its own set of rules for mutual fund investments.
So step one is figuring out where you fit into that NRI puzzle.
Exactly. It's crucial to understand which category applies to you because that will determine the specific regulations you need to follow.
Got it. NRI identity. Check. So let's say you figured that out. What are some of the first things you might bump into when trying to invest in mutual funds as an NRI?
One of the first things you'll likely encounter is KYC, Know Your Customer. It's a standard process for verifying your identity. But for NRIs, you'll hear about something called validated KYC status.
Okay, validated KYC. Is that absolutely essential to invest?
Not necessarily. You can still invest even if your KYC status is just registered. But here's the catch. There's a deadline looming April 30th, 2025. After that, you'll need a validated KYC to continue investing.
All right, note to self, check that KYC status. Now, let's talk about everyone's favorite topic, taxes. Are NRIs taxed differently on their mutual fund investments?
Well, the good news is that whether you're an NRI or NRO account holder, you're taxed at the same rates as resident Indians when it comes to capital gains.
So no extra burden there. That's a relief.
However, there's this thing called TDS, tax deducted at source, that comes into play.
TDS. Can you break that down for us? What does it mean for NRIs investing in mutual funds?
Sure. Essentially, when you redeem your mutual fund units and make a profit, a certain percentage of that profit is deducted as tax right at the source. It's like a pay-as-you-go system for your capital gains tax.
Ah, so the tax man gets his cut up front.
Exactly. And you'll also need to provide proof that the money you used to invest came from either an NRE or NRO account.
Okay, so documentation is key. And speaking of NRE and NRO accounts, can you remind us about the main differences between these two types of accounts, and why does it matter for mutual fund investments?
Absolutely. This is where it can get a bit tricky. An NRE account is for your foreign earnings. The NRE stands for non-resident external. And the money in this account is fully repatriable, meaning you can transfer it back to your home country in foreign currency without restrictions.
So it's like a free-flowing river of money back to your home base.
Precisely. Now, an NRO account, or non-resident ordinary account, is a bit different. This one's for income you've earned in India, like rental income or pension. The key difference is that funds in an NRO account are non-repatriable, meaning you can only withdraw them in Indian rupees.
Okay, so NRE for foreign earnings coming in, NRO for Indian earnings staying put. But how does this all connect to your mutual fund investments?
Here's the crucial link. If you invest in a mutual fund using money from your NRE account, any money you get back when you redeem those units can only go back into an NRE account. Same goes for NRA accounts. You can't switch things up later on.
Ah, so consistency is key. Choose your account wisely at the beginning because it has a big impact later on.
Exactly. And this is why understanding those account differences is so important for NRI investors.
Got it. So we've tackled KYC, taxes, and those NRE versus NRI accounts. But now let's talk paperwork. I'm guessing KYC isn't the only document NRIs need to worry about.
You're right. KYC is just the starting point. You'll need the usual suspects: a PAN card, your passport, and proof of address, both for your Indian and foreign addresses.
So they want to know where you've been and where you are. Makes sense. But I'm assuming there are some NRI-specific documents as well.
Absolutely. You'll need proof that the money you're investing came from either your NRE or NRO account. This could be a bank statement showing the transfer, or even a canceled check that clearly shows the account type. Oh, and here's a fun one. If you're a sailor, you'll need a copy of your continuous discharge certificate.
Wow, talk about a specific requirement. You learn something new every day.
It's true. But these requirements are all about ensuring compliance and transparency.
Makes sense. So it seems like the documentation process can be pretty detailed for NRIs.
It can be, but having all your ducks in a row from the start can save you a lot of headaches later on.
All right, good advice. So we've got KYC, taxes, those NRE versus NRA accounts, and a whole lot of paperwork. But we live in a digital world. Can NRIs even invest in mutual funds online? Or are we talking about stacks of paper and endless trip to the bank?
Don't worry, we're not stuck in the Stone Age. There are plenty of digital platforms specifically designed for NRI investors, making the whole process much smoother.
Okay, phew. So what are some of the popular options out there?
Well, you have platforms like MFU, which stands for Mutual Funds Utility. It's a one-stop shop to manage your investments across different mutual fund companies. Then there are exchange platforms like the NSE and BSE, where you can buy and sell units directly.
So lots of choices, but I'm guessing there are some catches for NRIs, especially depending on where they live.
You're sharp. For instance, U.S.-based NRIs might have limited options, like MFU and those exchange platforms. And here's a crucial detail. After completing a transaction, U.S.-based investors need to send a signed declaration form to CAMPS, a registrar and transfer agent for mutual funds, and they need to use a very specific subject line.
Wait, so missing that specific subject line could derail the whole investment?
It's definitely a detail you don't want to overlook, so double-check that subject line, maybe even send a follow-up email just to be safe.
Okay, U.S. investors, consider yourselves warned. So we've tackled NRI bank accounts, KYC requirements, and those digital platforms. Now let's dive into the world of taxation. I know it can be a bit of a headache, but it's essential to understand how it works. First things first. Are NRIs taxed on their global income?
Here's a sigh of relief. NRIs are only taxed on income generated within India. Your foreign earnings are completely off the radar for the Indian taxman.
Okay, that's good news. But what exactly counts as income generated within India?
Think of it this way. If the money is earned on Indian soil, it's taxable. This includes things like salary earned in India, rental income from a property in India, capital gains from selling assets in India, and even the interest you earn on your NRO account.
So if you're earning rental income from that apartment you inherited in Mumbai, the taxman will be knocking.
Exactly. However, there is a silver lining. Interest earned on NRE and FCNR accounts is completely tax-free.
Oh, that's a nice perk, so it pays to choose the right account. Now, we talked about TDS earlier. Can you remind us how that applies to capital gains from mutual fund investments?
Sure, when you sell your mutual fund units and make a profit, the taxman wants his share right away. So before you see any of that money, they deduct the tax right at the source.
So there's no escaping the taxman. What are the TDS rates for NRIs?
Well, they vary depending on whether you're dealing with a short-term or long-term capital gain and whether it's from an equity or non-equity fund. But here's the key. Keep track of your TDS deductions. You can adjust them against your overall tax liability later on.
Got it. Keep those records organized. Now, what if you're in a situation where you're being taxed in both India and your current country of residence? That sounds like a double whammy.
That's where DTAA comes in. It stands for Double Taxation Avoidance Agreement.
Ah, yes, DTAA. Lifesaver.
Exactly. It's a treaty between India and other countries specifically designed to prevent you from being taxed twice on the same income.
Okay, so no double jeopardy when it comes to taxes. How many countries does India have these agreements with?
Over 85 countries. You can find the complete list on the Income Tax Department's website.
Okay, so if you're worried about double taxation, check that list. But how do you actually claim exemption under DTAA? Is it just a matter of saying, hey, I have a DTAA?
Not quite. There's some paperwork involved. You need to submit something called Form 10F electronically through the income tax portal, and you'll also need a tax residency certificate, or TRC, from your country of residence to prove you're a tax resident there.
All right, so it's about jumping through the right hoops. Are there any other supporting documents that might be needed?
Yes, depending on your specific situation, you might need to provide extra documents like your address proof, your passport, your visa, your PAN card, and even your tax identification number from your home country. It's always better to be overprepared than underprepared.
Okay, so DTAA, gather your paperwork. Now let's switch gears for a moment and talk about those who are new to the whole NRI thing. What are some essential first steps they should take to get their financial house in order?
The most important first step is to inform your bank about your change in tax status. And this is not just a suggestion, it's a legal requirement. You cannot hold a resident savings account once you become an NRI.
So no sneaking that one past the authorities.
Nope. Once you become an NRI, your resident savings account needs to be converted into an NRI account.
Okay, so bank notification, check. What else is on that to-do list?
Make sure to update your KYC information, including your new tax status, your foreign address, and your new contact number. And if you have any SIPs, you'll need to reissue those NACH mandates to make sure those payments continue smoothly.
Okay, so it's about making sure all your financial touch points are up to date with your new NRI status.
Precisely. It's like establishing a brand new financial identity.
Got it. Now, before we jump into part 2, where we'll explore how you can actually invest as an NRI, let's take a moment to recap those key takeaways, especially those crucial details that can help our listeners avoid those common NRI investment pitfalls.
Absolutely. It's all about starting off on the right foot.
Okay, so what are those must-knows?
Well, first and foremost, remember that becoming an NRI isn't just about the time you spend abroad. It's about your residency status during a specific financial year.
Right, so no more assuming you're an NRI just because you went on that 3-month backpacking trip.
Exactly. And when it comes to KYC, remember that validated status isn't mandatory right now, but that April 30, 2025 deadline is approaching fast.
Okay, so get that KYC in order. What about taxes? What should NRIs keep in mind?
While the capital gains tax rates are the same for NRIs and resident Indians, TDS comes into play. So keep track of those TDS deductions and be ready to prove that your funds were sent from either an NRI or NRI account.
Okay, so documentation is king, and don't forget about the difference between NRE and NRO accounts, especially when it comes to repatriation.
Absolutely. Choosing the wrong account can lead to major headaches later on. And remember, documentation is your friend. Make sure you have all the necessary NRI-specific documents in order, everything from your PAN card to that continuous discharge certificate for our sailor friends.
And even though those digital platforms offer a lot of convenience, U.S.-based investors in particular need to be extra careful about that signed declaration form and that very specific subject line.
Absolutely. And finally, remember that DTAA can be a lifesaver if you're facing double taxation.
Right, so it's all about understanding the rules of the game. Now, this is all incredibly valuable information, but what's the big picture here? What should our listeners be thinking about as they embark on their NRI investment journey?
That's a great question. Now that you're aware of the basics and those potential pitfalls, it's time to start thinking about how you can use your unique NRI status to build a diversified investment portfolio that really aligns with your financial goals.
So it's not just about avoiding those hurdles, it's about using your NRI status to your advantage.
Exactly. And that's what we'll be diving into in part 2 of this deep dive, where we'll explore specific investment avenues, risk management strategies, and how to develop a long-term investment plan that works for you.
Sounds like a plan, so stay tuned for part 2 where we'll unpack all of that and more. Welcome back to the deep dive. In part 1, we talked about all those initial hurdles NRIs face when it comes to mutual fund investments. Now let's build on that and explore how you can actually invest while living abroad.
Exactly. We covered the what and the why. Now let's dive into the how.
Okay, so let's say you're an NRI, you've got your KYC sorted, you've picked the right NRE or NRO account, and you're ready to go. What are your options? Can you just walk into any bank in your current country and say, hey, I want to invest in some Indian mutual funds?
Not quite. While investing as an NRI has become much easier thanks to technology, there are still specific avenues you need to explore. One option is to go directly through a mutual fund house that caters to NRI investors.
So going straight to the source, what are the advantages of that approach?
Well, one of the biggest perks is lower expense ratios. Since you're not going through an intermediary, you're saving on those fees, which can really add up over time and boost your returns.
Makes sense. So that's something to consider if you're looking to maximize those gains. But what if you're a bit hesitant to go it alone? Is there an option for those who prefer a little more hand-holding?
Absolutely. That's where financial advisors who specialize in MRI investments come in. They can be your guide, helping you navigate all the complexities of international investing.
So it's like having a personal Sherpa for your NRI investment journey.
I like that analogy. A good advisor can help you figure out your risk tolerance, understand your financial goals, and put together a personalized investment portfolio that really aligns with your needs.
Okay, so direct investment or seeking expert advice. Two solid options. But what about those digital platforms we discussed earlier? Did they play a role in this process?
Oh, they absolutely do. Digital platforms have really changed the game for NRI investors. You've got platforms like MFU, which we mentioned before, offering a convenient way to manage investments across multiple mutual fund houses. And then you have those exchange platforms like the NSE and BSE, where you can directly buy and sell units on the stock exchange.
So plenty of choices. It's all about finding the platform that fits your style and comfort level. But regardless of which route you choose, due diligence is still key, right?
You bet. Don't just jump into any investment without doing your homework. Take the time to research different mutual fund schemes, understand their investment goals, and look at their past performance.
So being an informed investor, not just a passive participant. Knowledge is power.
Exactly. Now let's talk about a topic that's often top of mind for NRIs: repatriation. Investing is great, but eventually you want access to those funds.
Absolutely, bringing those hard-earned investment proceeds back home, but I'm guessing there are rules and regulations around repatriation. It can't be as simple as transferring money back to your foreign account.
You're right, it's not always straightforward. The rules can vary depending on your NRI category and where your funds are coming from. For example, funds in an NRE account are generally fully repatriable, while those in an NRE account have limitations.
Which brings us back to the importance of picking the right account from the get-go.
Exactly. It all comes back to that initial decision. And when it comes to bringing back those proceeds from your mutual fund investments, you'll need to follow specific RBI guidelines and provide the necessary documents to your bank.
Okay, so what kind of paperwork are we talking about here? Another mountain of documents.
It's not as daunting as it might sound. Typically, you'll need your passport, your visa, your PAN card, bank statements that show where your funds came from, and maybe even a CA certificate to verify the legitimacy of your earnings.
So it's about transparency and accountability.
Exactly. And don't hesitate to reach out to your bank or a financial advisor for guidance. they can make the process much smoother.
All right, repatriation, check. We've discussed investment avenues and bringing those funds back home. But what about risk? Investing always comes with a certain level of uncertainty. How can NRIs protect their hard-earned money?
Risk management is a crucial part of any investment strategy. And one of the golden rules is diversification. Don't put all your eggs in one basket, as they say.
Spread the love across different investments.
Precisely. Diversify across different asset classes like equities, debt, and even real estate. Spread it across different industries. And don't forget about geographical diversification.
Okay, so it's about creating a safety net by not relying on any single investment to perform well. What about currency risk? That always seems like a wild card for NRIs.
You're absolutely right. The value of the Indian rupee can fluctuate against other currencies, and that can really impact your returns when you repatriate your funds.
So how do you even begin to tackle that? It feels like trying to predict the weather.
Well, there are strategies to mitigate that currency risk. One option is to hedge your exposure using financial instruments like currency forwards or options.
Okay, I'm already getting a bit lost. Is that something the average NRI investor would typically do?
It depends on your risk tolerance and how much you're investing. Hedging can be complex. It might be more relevant for larger portfolios. But for smaller investments, a simpler approach is to diversify across different currencies.
So maybe holding some investments in the currency of your current country.
That's one way to do it. It can help balance things out and reduce the impact of those sudden fluctuations in the rupee's value.
Got it. So diversification is key, even when it comes to currencies. But what about those other risks, like changes in government policies or global events, those external factors that can impact investments?
Those are what we call regulatory and political risks, and yes, they can definitely create some volatility in the market.
So how can NRIs stay ahead of the curve and protect themselves from these unpredictable factors?
Well, first and foremost, stay informed. Keep an eye on what's happening in India, in the global economy, follow those reputable financial news sources, and understand the geopolitical landscape.
So be an engaged global citizen, not just bury your head in the sand.
Exactly. And you guessed it, diversification can also help here. By spreading your investments across different countries and different types of assets, you're reducing your exposure to any single event.
Creating a buffer zone for your portfolio.
Precisely. And again, don't underestimate the value of professional advice. A financial advisor who understands NRI investments can provide those valuable insights and help you adjust your strategy as needed.
It's like having a seasoned navigator to guide you through those choppy waters. Okay, so we've covered those risk management strategies. What are the key takeaways here for our listeners?
All right, let's sum it up. Remember, diversification is your best friend. Spread those investments across different asset classes, different sectors, different geographies. Don't put all your eggs in one basket.
Got it. Spread the love, spread the risk. What else?
Be aware of that currency risk. Consider hedging strategies or diversifying your portfolio across different currencies to soften the blow of those fluctuations.
Okay, hedge or diversify. And the last one.
Stay informed about those regulatory and political risks. Keep your finger on the pulse of what's happening globally, and don't hesitate to get professional advice if you need it.
Stay informed and seek guidance. Great advice. Now, let's move on to another crucial aspect of investing, long-term planning. It's not just about today, it's about building a secure financial future.
You're absolutely right. And for NRIs, long-term planning gets a little more complex. You might have different financial goals and priorities compared to someone living in India.
Right, like retirement planning could look very different for someone who plans to retire abroad versus someone who plans to come back to India.
Exactly. So when you're developing your long-term investment plan, consider factors like your retirement goals, your children's education expenses, even your estate planning needs.
So it's about creating a roadmap that aligns with your specific situation and aspirations.
Precisely. And don't forget, a good investment plan should be flexible. Life rarely goes exactly as planned, so be ready to adjust your strategy as needed.
Because life throws curveballs, right?
Exactly. Regularly review your plan, make those adjustments, and if you're not sure about the best course of action, don't hesitate to seek professional guidance.
So it's about staying engaged throughout your investment journey. But let's get specific. What are some long-term investment options that might be particularly good for NRIs?
Well, we've already talked about mutual funds and how versatile they are. They're a great place to start because they offer diversification, professional management, and flexibility. You could choose from a wide range of funds, all depending on your risk tolerance, your goals, and your time horizon.
Right, those mutual funds are like the all-star players, but are there specific types of funds that might be extra beneficial for NRIs?
Absolutely. For example, if you believe in the long-term growth potential of the Indian economy, you might want to look at funds that focus on Indian equities.
So tapping into that India growth story.
Exactly. But what if you're looking for something a bit more stable, especially in these uncertain times?
Right, stability is important too.
In that case, debt funds could be a good option. They mostly invest in fixed income securities, like government bonds and corporate bonds, which offer relatively stable returns and lower risk compared to those equity funds.
So debt funds for a smoother ride. Got it. And what about those tax-saving LSS funds we talked about earlier? Are those a good option for NRIs?
They definitely can be. LS funds don't just offer the potential for long-term growth, but they also give you tax benefits under Section 80C of the Income Tax Act. It's like killing two birds with one stone, growing your investments and saving on taxes.
Okay, who doesn't love a good tax break? Now, let's move beyond mutual funds for a bit. What about real estate? I feel like every Indian family has a story about investing in property.
You're right, real estate is a big part of the Indian culture. And for NRIs, it can be a tangible way to connect with their homeland while potentially generating rental income and seeing that property value appreciate over time.
So owning a piece of home even while living abroad.
Exactly. But, of course, there are some unique challenges for NRIs when it comes to real estate investments.
I bet. What are some of those challenges?
One of the biggest is managing the property from afar. You either need to find a reliable property manager or be ready to handle things remotely, which can be a headache.
Right. It's not as simple as just buying the property and watching it go up in value. There's work involved.
Exactly. And don't forget about the illiquidity of real estate. It can take time to sell a property, so it's not a good option if you need to access your funds quickly.
So a long-term play, not a get-rich-quick scheme.
Precisely. And you'll need to factor in things like property taxes, maintenance costs, and even those potential headaches with rental management.
Okay, real estate. Proceed with caution and do your research. Maybe even get some professional help. Are there other long-term investment options we should be thinking about?
Of course. For NRIs who are looking for more liquid and globally diversified investments, there are options like international mutual funds or ETFs that track global indices.
So expanding beyond the Indian market.
Exactly. It can be a great way to tap into growth opportunities in different parts of the world and different sectors, further diversifying your portfolio and potentially increasing your returns.
Global diversification. Check. Now, I'm curious, are there investment options for those who are a bit more adventurous, those who are willing to take on higher risk for the potential of those bigger rewards?
You're thinking about alternative investments, things like venture capital or private equity. That's the world of startups, innovation, emerging businesses.
Getting in on the ground floor of the next big thing.
Exactly. But of course, these investments typically come with higher risks and can be harder to get your money out of quickly.
So a calculated risk for those who are comfortable with uncertainty.
Exactly. Now, it's important to remember that this isn't an exhaustive list of investment options. The best approach for you will always depend on your own financial goals, your risk tolerance, and your time horizon.
Right, there's no one-size-fits-all approach.
Exactly. And that's why seeking professional financial advice is so important. A good advisor can help you navigate the world of NRI investing, put together a plan, and guide you towards those financial goals.
It's like having a personal financial coach in your corner. Now, before we move on to part 3, where we'll delve into even more specific strategies, let's recap those key points from this segment. What are those must-remember takeaways?
All right, let's go over those important points. First and foremost, diversification is key. Spread those investments across different asset classes, sectors, and geographies to mitigate risk. Don't put all your eggs in one basket.
Spread the love, spread the risk. What else?
Be aware of that currency risk. Consider hedging or diversifying your portfolio across different currencies to lessen the impact of those fluctuations.
Okay, hedge or diversify. And what about those external factors that can shake things up?
Stay informed about those regulatory and political risks. Stay in the loop about global events. And don't hesitate to seek professional advice.
Got it. Stay informed and seek guidance. Great advice. Now, when it comes to long-term planning, what are some of the key things NRIs should be thinking about?
Think about your retirement goals, your children's education, your estate planning. It's all about creating a roadmap that makes sense for your unique situation.
A personalized plan, not just a generic one.
Exactly. And remember, life is full of surprises. Make sure your investment plan is flexible and adaptable to those inevitable changes. Regularly review your plan, and if you're unsure about something, don't be afraid to get professional guidance.
Stay agile, be ready to pivot. Now, we've covered a lot of different investment options today, from mutual funds and real estate to even venture capital. It can feel a bit overwhelming. What's the one piece of advice you would give to NRIs who are just starting out on their investment journey?
That's a great question. My advice would be, start with what you know and gradually expand your horizons. Don't feel like you need to jump into those complex investments right away. Take your time, do your research, and don't be afraid to ask for help.
So start small, learn as you go, and ask for help when you need it.
Exactly. Investing doesn't have to be intimidating. With the right knowledge and the whole patience, you can build a solid financial future for yourself and your loved ones.
That's what it's all about, creating a secure and prosperous future, now ready to explore some specific investment strategies that can help you get there.
Absolutely. That's what we'll be uncovering in part 3 of this deep dive.
Welcome back to the deep dive. We've covered a lot of ground from those NRI basics to all those different investment options. Now, in this final part, let's get into some specific strategies that can help you, as an NRI, make the most of your mutual fund investments.
It's about fine-tuning your approach, really making it work for your goals and risk tolerance.
Okay, so let's put on our investment strategist hats. Where do we even begin?
Well, one of the first things to think about is your investment horizon. Are you looking for those quick wins, those short-term gains, or are you in it for the long haul?
That makes sense. Time plays a big role. So let's say you're an NRI with a long-term perspective. What are some strategies that might work well in that case?
If you're looking at, say, 5 years or more, you've got time on your side. You can ride out those market ups and downs. In that case, equity funds could be a really powerful tool.
Right. We talked about the potential of Indian equity before, but are there any specific things NRIs should consider when investing in these funds?
Absolutely. Currency risk is a big one. You're earning in a foreign currency, but investing in Indian rupees, so those exchange rate fluctuations can really impact your returns.
Ah, yes, that pesky currency risk. We talked about hedging and diversification as ways to manage that, but are there any other strategies NRIs can use?
One approach is to stagger your investments. Instead of investing a big lump sum all at once, you could spread it out over time.
So like a SIP, but for a larger amount.
Exactly. This way, you're averaging out your purchase price over time, reducing the impact of those sudden swings in the exchange rate.
Okay, that's a smart move. So long-term investors think about staggering those investments, but what about those who need access to their funds sooner? What if you're an NRI with a short-term goal?
In that case, debt funds might be a better fit. They tend to offer more stable returns, lower risk, making them a good option for those short-term goals.
Right, debt funds for stability, equity funds for growth. It's about striking that balance.
Exactly.
Now, let's talk about something that's on a lot of people's minds. Retirement planning. It's something we all need to think about, but I imagine it's even more complicated for NRIs.
Absolutely. There are a lot of factors to consider. Where do you see yourself retiring? What kind of lifestyle do you want? How are you going to manage your finances across different countries?
So many questions. It's a bit of a puzzle.
It is. A crucial first step is to really nail down those retirement goals and create a realistic budget. Think about your expenses, healthcare costs, any travel plans you might have.
So picture that dream retirement and back it up with a solid plan.
Precisely.
But what about investments specifically? How can NRIs build a retirement portfolio that can provide that steady income during those retirement years?
Diversification is key yet again. Spread your investments across different types of assets, equities, debt, even alternative investments if you're comfortable with that level of risk.
Don't put all those retirement eggs in one basket, right? But how do you know what the right mix is?
It depends on how much risk you're willing to take and how long you have until retirement. If you're younger, you might be more comfortable with risk and put more into equities.
Ride those market waves.
Right. But as you get closer to retirement, you might want to shift to a more conservative approach, putting more into debt for that stability.
So it's about adjusting as you go.
Exactly.
What about those tax saving schemes we talked about before? Do they play a role in retirement planning for NRIs?
They can, particularly for those who plan to retire back in India. Schemes like LSS not only offer those tax benefits, but they also have that potential for long-term growth.
So tax savings and growth potential. Always a good combination.
Absolutely.
Now, before we wrap things up, let's touch on one more thing. Estate planning. Not the most fun topic, I know, but it's so important to make sure your assets are protected.
It is. And estate planning for NRIs can get complicated. You're dealing with assets, beneficiaries, potentially in multiple countries.
How do you even begin to navigate all of that?
The first thing is to understand the inheritance laws in both India and your current country of residence. Those laws can be very different, so you need to make sure your will is valid and enforceable in both places.
Bridging those legal gaps.
Exactly. And it's a good idea to talk to estate planning professionals in both countries to help you through those tricky parts.
Expert advice is always a good idea when dealing with something this important.
Absolutely. And don't forget to talk to your family, those beneficiaries, about your wishes. Open communication can prevent a lot of misunderstandings and potential conflicts later on.
Transparency and communication. Got it.
And remember, estate planning isn't a one-time thing. Revisit your plan every so often to make sure it still aligns with your current situation and wishes.
Stay proactive, keep things updated. Makes sense.
Absolutely.
Well, we've covered a lot of ground in this deep dive. From the basics of being an NRI to all those different investment strategies, we've explored a whole range of things. Before we say goodbye, let's recap those key takeaways. What are your top 3 pieces of advice for our listeners?
All right, 3 golden rules. First, knowledge is power. The more you understand about the different investment options, the risks, the regulations, the better decisions you'll make. Don't be afraid to ask those questions and seek guidance if you need it.
Great advice. What's number 2?
Diversification is your best friend. I know we've said it a lot, but it's true. Spread those investments across different asset classes, sectors, geographies. Don't put all your eggs in one basket.
We can't emphasize that enough. And finally, number 3.
Investing is a journey, not a sprint. Be disciplined, be patient, and focus on those long-term goals. The market will have its ups and downs, but with a solid plan and a bit of perseverance, you can reach those financial goals.
Those are words to live by. So to all our NRI listeners, embrace the world of investing. Do your research, seek advice when you need it, and remember that your financial future is within your reach.
Happy investing.
And from all of us here at The Deep Dive, thank you for joining us on this journey. Until next time, keep learning, keep growing, and keep diving deep. CEI.